Crypto Market Update, November 7, 2025, between growth and collapse. Hey everyone, welcome back to CryptoMania. Today we're breaking down what's really happening in the crypto market as of November 7, 2025. Bitcoin is holding around $102,000. Altcoins have slightly pulled back, but institutional interest is coming back strong. We'll talk about ETFs, Dogecoin, DeFi credit markets, and even the latest hacker attacks. But the main question is this just a correction or the start of something bigger? Stay tuned, hit that like button, and let's dive in. Market overview. Over the past week, the total crypto market cap dropped about 1.8%, now sitting near $3.7 trillion. Just a couple of months ago, it was over $4 trillion. So yes, we're seeing a cool down, but not a full-on bear market yet. Bitcoin trades between $101,000 and $102,000, a key psychological level that traders and big funds are watching closely. Ethereum is around $5,200, Solana $190, and XRP 67 cents. Meanwhile, Dogecoin suddenly stole the spotlight after huge news about a potential spot ETF. We'll get to that soon. Bitcoin, correction or trap? Right now, analysts are divided. Some experts, including CryptoQuant, say Bitcoin has entered a very bearish phase, with possible pullbacks to $91,000 or even $72,000 in a worst-case scenario. The reason? Weak liquidity and a strengthening U.S. dollar. Investors are leaving risk assets, and like it or not, Bitcoin is still viewed as one of them. But on the flip side, JPMorgan analysts remain optimistic. They believe that if ETF inflows continue and inflation remains under control, BTC could hit $170,000 within the next 6 to 12 months. So we've got two clear scenarios, bearish versus bullish. And as always, the truth lies somewhere in between. A short-term drop might not be a disaster. It could actually be a buying opportunity. Institutional investments and ETFs. The most interesting thing this week, institutional money is back. After 6 straight days of outflows, U.S. spot Bitcoin ETFs just recorded $240 million in inflows. That's a strong signal. Big players haven't left. They were just waiting for the market to cool off. ETFs are now the bridge between traditional finance and crypto, and that bridge is getting stronger every month. In total, U.S. spot Bitcoin ETFs have accumulated over $100 billion in crypto assets this year. And according to a joint PwC and AIMA report, 55% of hedge funds now hold some exposure to crypto, with an average of around 7% of total assets. In other words, crypto is no longer alternative. It's officially mainstream. DeFi and credit markets. The company Flowdesk recently stated that the crypto credit market is in a fragile balance. Some borrowers are cutting leverage, while others are ramping up exposure to BTC and Solana. This shows that demand for crypto credit hasn't disappeared, but profit margins are shrinking. DeFi yields are falling, competition is growing, and many projects are exploring hybrid models involving AI or RWA, real-world assets. In short, DeFi isn't dying, it's evolving. We're seeing a shift towards sustainability and real utility, not just high APR promises. Dogecoin, Solana, XRP, altcoin highlights. Now, let's move to the altcoin side. Dogecoin is back in the spotlight after Bitwise filed a Form 8A to launch a spot Doge ETF. If approved, it would be the first meme coin ETF in history. Sounds crazy, but it's a strong signal that meme culture is officially going mainstream. Doge has already jumped about 9% this week on the news. Meanwhile, Solana slightly pulled back, but remains among the top-performing chains by DeFi volume. XRP stays relatively stable, not rallying but not crashing either, showing that it has a solid investor base. Security and hacker attacks. Unfortunately, the week was not without bad news. Balancer, a major DeFi protocol, suffered a sophisticated multi-swap exploit, losing about $120 million in the process. The team has already offered a 20% bounty to whoever returns the stolen funds. It's another reminder that even long-established protocols aren't 100% safe. If you're in DeFi, always use audited contracts, don't keep large amounts in one place, and remember, self-custody is key. Macro trends and dollar strength. Zooming out, the global picture matters too. The US dollar index, DXY, climbed to 107, putting pressure on all risk assets. Tech stocks are also down, and crypto is following the trend. This is classic macro behavior. When the dollar is strong, crypto tends to weaken. Until the Federal Reserve starts signaling rate cuts, it'll be tough to see a full bull run. However, analysts expect that by Q1 2026, monetary easing could begin, which historically has boosted risk-on markets, including crypto. So, yes, there's light at the end of the tunnel. Tips for beginners and final thoughts. Let's wrap this up. Right now, the market is uncertain. Bitcoin is holding around 100K, institutions are slowly buying back in, DeFi is stabilizing but still risky. The key here is don't panic and don't buy emotionally. Stick to dollar cost averaging, DCA, keep some funds in stable coins, avoid leaving everything on exchanges, and double-check your news sources. The crypto market is alive, unpredictable, and full of opportunities, but only for those who stay disciplined. That's all for today. If you found this video useful, make sure to like, subscribe, and share it with your friends. Remember, knowledge is your most powerful asset. This is CryptoMania, and we'll see you in the next episode.